Welcome to the podcast, Accounting, We Go Beyond the Numbers, from Ross Buehler Falk, a CPA and business advisory firm. I'm Kay Wagner, your host for this podcast series. You'll receive great business advice here, including accounting, tax tips, and a whole lot more that will help you grow your business. Here we go. We've just finished up a session on the new tax law, and I have Jeff Groff with me here, who is the tax partner at RBF at Ross Buehler Falk. So Jeff, give me the highlights from this morning, and then we're going to get some feedback from some of our attendees.
The highlights are pretty obvious that this is not tax simplification. This is making things a lot more complicated overall, and there are a few people that are going to wind up paying more in tax. There'll be people paying less in tax, and of course you're going to have the ones that's going to be in the middle. So the bottom line is we have to really plan with our clients and see how it's going to affect their individual situation.
So from a business perspective, there are some key points: deductions, AMT limits, all of those kinds of things. Just a couple of highlights in those areas.
The highlights with the businesses are the expanded depreciation rules. They're made a little bit more consistent. We now know that we're going to have expanded Section 179 and bonus depreciation for several more years, instead of every year waiting till the very end to see if it's going to be extended. AMT for corporations has been eliminated, repealed, so we'll no longer have AMT for corporations, C corporations that is. And as far as individuals go, the AMT implications have been greatly reduced by expanding the phase-out limitations and expanding the exemption amount.
Accountants this year have a lot of work to do in working through the maze of what this is. Simplification or not, we'll see, right?
Absolutely, Kay. We have to stay focused on following the current analysis, because there's a lot of things we don't know about the law. This is a major redo of the tax code, and we need to meet with our clients and individually see how it affects them and do some planning as necessary, because what works for one person is not going to be the same situation for another one.
We have some really good feedback from some of the participants who were here today, so we're going to roll into that now. So thanks for your presentation, you and your two partners. It was great, so thank you.
Thank you.
Okay, Mark Lydon, tell me what you took away from today.
I think the single biggest issue is this is not for the faint of heart, that the tax changes that are supposed to be simple have caused a lot of anxiety for small businesses especially, and also for those who are planning to retire and have major changes in their life where their income will change decisively, or they're looking at estate planning. So all of this now has to be changed and incorporated in how we look at our clients and our customers.
Okay, Chuck Paul, Crater Farms, tell us what you learned this morning.
Well, I think the things that caught my attention, and they interface with each other, are the limitation on the interest deduction, and then also the bonus depreciation, because our company has been expanding rapidly, so we've had a lot of construction and new facilities. We also are in a very volatile industry, so if you build a whole lot, you can depress your income sufficiently to come into play with the interest deduction. So we're going to have to take a look at that as we go forward, I think.
So it looks like a good thing for you.
It may be. We'll see.
So we're here with Mike Burkhart, and what's your takeaway from this morning?
Well, I come from the S Corp world here, so we're looking to do some investments in the near future with regard to increasing some of the plant, build another add-on to our plant. So some of the rules now where you can accelerate that depreciation and up to the $1 million, that's definitely going to be beneficial for our company. So that was definitely one of the takeaways I took away from today.
Great. Thanks, Mike.
All right, sure.
Appreciate it. So we're here with Dave Neslin. Dave, what are your takeaways from this morning?
Well, I can see some areas where it's going to save us some money. It's going to help us with our planning going forward, especially as we think about potential real estate projects. Some of the things I learned today are going to have some impact on us. So I think ultimately it's an understanding as to, I don't think things have gotten simpler. But we have a different rate environment. It's helpful to understand that, and it's also helpful to know about these things when we're planning for our coming year, which is our fiscal year ends 4/30. So we're just now getting into our planning process.
So I'm here with Brian White. Brian, you were in our session this morning. What are your takeaways for today?
For me, I'm excited because many of my clients, I think, are really going to benefit from the tax changes, and so I'm excited to see what their plans are for how they're going to potentially reinvest some of that excess and hopefully see some continued growth. For me personally, I'll benefit from the tax changes, although it does look like it gets a little more complicated as opposed to simple. But I think economically we're going to be in a better position after the changes, so that excites me.
That's it for today, folks. Visit rbfco.com, that's rbfco.com, for more information on accounting that goes beyond the numbers. This is your host, Kay Wagner, for Ross Bueller Falk. Our next episode is coming soon. Don't miss it.